Hey everyone, happy Tuesday. That's right, it's your girl coming at you with another Tuesday, another mortgage tip, hashtag JLoan in the building. And I have some great information for you today. And as always, I'm always looking for information that's helpful and information that would, that I've either come across or read in order to be like, wow, that would make a great video to actually help my borrowers who are looking to either purchase, refinance, or who are actually in the middle of a transaction. So I'm just going to tell you what I read today, and it helped me to prepare my video today. So as I was looking through a mortgage forum, I read a post, and the post basically said I had one condition left from the underwriter. It was a credit condition, and it was to remove a disputed account from the borrower's credit report. And when I did, their score went from a 679 to a 602, and now my borrower no longer qualifies. Now, I'm gonna be very honest with you. Every loan officer in the world, whether new or old, has run into this situation before. But great loan officers learn from those mistakes, and then they never make those mistakes again, okay? Now, when I first got in the business, my first boss, who I love to death, he always told me to read your findings. It's super important to read your findings. Now, you may be saying, well, what are findings, right? And it's my job to make this as easy as possible. When you fill out an application, whether you provide documents at first, as a loan officer, we fill out that application completely. And then in order for us to know whether we can proceed with your loan, we run your loan through automated underwriting. Whether it's an FHA loan, conventional, VA, we have to run it through automated underwriting through Fannie Mae or Freddie Mac. And then it tells us, it comes back, and it will tell us, hey, you have an approved, eligible to proceed, but here are the things that you need to make sure are done in order to get a final approval, okay? Now, those things may be verifications of rent. It may be asking for verification of employment, making sure, all the T's and the I's are dotted and crossed. But one of the ones that are in there that most loan officers will overlook or not read their approval at all will state that disputed accounts are XYZ, and these accounts need to be removed, or the file will be sent to manual underwriting, or XYZ. So it's a condition that's on there from the beginning. It doesn't just pop up 30 days into your process. It's there from the beginning, okay? And so, I don't know what this is. Okay, sorry, cut it off. And so, this happens, right? So in this loan officer's case, either she missed it, or when she got her initial approval, she didn't read it, or she read it and wasn't familiar with the condition and waited to take care of that condition. And when you have to remove an account, you have to rescore that account, okay? So let me bring it back a little bit, okay? So where did this disputed accounts and why are they an issue, okay? So when I got into business in 2006, before there were all of these rules and regulations and all these guidelines and all the things that borrowers do not like, and as loan officers sometimes we feel is very extreme, there really weren't all of these rules. And then the whole mortgage meltdown happened, and one of the reasons why lenders or the government felt that there were so many foreclosures is because people were qualifying for loans who really shouldn't have been qualifying, okay? And one of the reasons why, just one of the many, were that there were accounts with credit accounts with disputed information. Now, what does this all mean, right? So what happens when you dispute an account? If we pull credit and it's still disputed, it totally removes that debt, that bad debt or that bad reporting or that collection. It removes it from your total score, okay? Therefore, it's giving us falsified credit scores. So it's basically like if someone had 10 disputed bad accounts and we pull their credit, they could now have a 700 score, but before they disputed it, their scores could be 590, okay? So what happened is they said, hey, we'll do these loans, but now you got to remove these disputes in order for us to proceed. And there's obviously too many guidelines for me to put in a video, but every loan is different, okay? So you have to remove these so that as a lender, we have a true credit score to what this borrower, what their true story is, okay? And so that's how disputed accounts became about. That's actually how during the time credit repair became pretty popular, because some wise person realized, hey, if you pay me, and I don't know if you remember, but back in the day, credit repair was like, it was a lot, $3,000 to $5,000, where these credit companies were promising that they'll get you higher scores and you could buy whatever you want. And the truth of the matter is they did, but they didn't do anything that you couldn't do, right? It's just as borrowers or as human beings, if we don't know, we just pay somebody, right? It's the ease of something. So what happens is when you have disputed accounts, they're either done by your credit repair company or they're borrower reported. You can actually dispute your own stuff on your credit report. So if you are truly in disagreement with the actual account, whether it be yours or not, the balance, that you were late, if you truly are in disagreement, you should dispute that. And what happens is, if you do it yourself, you write a letter to TransUnion, Equifax, Experian. They have forms on their website that you can fill out, and you tell them why you are disputing this account. And when you do, they have 30 days to resolve that account. Now they can come back to you and say, hey, we didn't find anything that supports what you're stating, and so we're going to put this back on your report, and now it becomes part of your score again, and you can disagree or you can redispute it, right? So I always say, hey, if you truly owe the debt, if it's truly right, do I agree with you disputing the account? I do not, and that's my personal opinion. And there's better ways that you should go about it. So long story short, in this case with this this lender or loan officer situation, this borrower now went through a whole process of down payment, inspections, appraisal costs, only not to be able to purchase that home in the immediate. And now there's things that you'll have to do. Okay, so if it's done at the beginning, because we get those findings at the beginning, and again, nothing against this loan officer, every loan officer has done this before, okay? Now, what does this do to your score? I already answered. It really gives you falsified credit scores. And so, you don't want to have the disputes or go into a mortgage transaction with tons of disputes. If everything is disputed, the lender's just going to make you take it off. You spent all that money on credit repair for us just to come back and say, hey, now we got to take it off. Okay, so you don't want to do that either. Okay, now how does it affect your underwriting, your approval? In this case, the underwriter said, hey, you got to take this off. And in this case, it was a huge debt. It wasn't like your $100 credit card that you're disputing. This was a very hefty debt, and it was super important to that file whether it was approved. Okay, so don't get me wrong. Just because you have disputed accounts, an underwriter doesn't always come back and say it. Every loan has its different, it has its different things that as the reason why. So like for instance, FHA, if you have $1,000 or more in a cumulative balance of disputed accounts, now we have to include 5% of whatever that debt is against your debt to income, whether you owe it or not. So if you have a $10,000, auto collection that's in dispute, and maybe that car was in an accident and Gap didn't pay for it, there could be tons of reasons why we now have to include 5% of that debt, and that could make a borrower not qualify. So there's just so many things that go on with disputed accounts. Now keep in mind, medical accounts, we don't ever count those against you. And then if you have like derogatory credit that your, let's just say your credit, your social was identity theft, sorry, gosh, I couldn't even think, or there was some unauthorized use, as long as you can provide copies of your police report, things of that sort, which we will ask you for, then we won't include those either, okay? And then here's my best practices or my best advice. You know, don't dispute unless it's truly wrong, okay? I mean, it's gonna come back. And here's the thing, if you dispute it, they move it off, and let's just say one of the 100,000, you know, laws against credit, and they missed one and they removed it. If they sell that debt and they report it now the right way, that debt could pop back up. So you got to keep that in mind too, okay? So if you truly owe it, it's just better to make payment arrangements than to allow it to go to collections and dispute it, okay? Once you let it go to collections, it dings your score, okay? And then if you dispute it, depending on the amount of that debt, it's going to come back and bite you anyway. So it's just better to try to really make a payment arrangement before it gets to collection, before they even report it. Because what a lot of people don't know is if you owe a debt and you're actually making payments on that debt, they won't report you to collections because you have a payment agreement in the file. So don't let it get there. You know, try to work that out beforehand. And then I always say use a credit monitoring company. I have it for my whole family, to closely watch your credit. You know, report wrongful information right away. Therefore, you know, I had a situation many years ago where I had an auto account on auto draft. I think they switched who did their auto draft, not my bank, the creditor did, and it missed taking out my payment, and my credit monitoring told me right away, hey, you have a 30-day late reporting on your report. I got on it right away, called them right away. They realized it was their mistake and they took it off. So if you monitor it, you don't have to, you can work proactively instead of reactively, okay? And then obviously I reported that right away, and that was in my favor. And then 2, ask your loan officer, you know, what are your loan conditions for your approval? You always have the right to know. And you'll be surprised when I get borrowers who are turned down by other lenders. The first question I want to know is, hey, what did they tell you? Why were you declined? Because as a lender, we may run into the same issue, or it's important for me to know, is there a workaround so that, you know, I don't waste your time or give you false hope on something that every lender may say no to. And you would be surprised how many borrowers have no clue why they were turned down. Now, I do believe maybe 25% of them know but don't want to tell you, but there's a lot of loan officers that have no clue. They have never even heard back from the loan officer. So if you want to get help, it's important to know what happened or what those conditions are. In this borrower's case, I do hope that they eventually get to close, and maybe they will, maybe they won't. But even at a lower credit score on an FHA loan, their rate's going to change. You don't know if that's going to drop, if that's going to increase their debt to income, their cash to close. And this just causes a whole bunch of unnecessary stress. So know at the beginning what that is. You have the right to ask your loan officer, have they read all the conditions? Is there anything on there that they feel will cause any type of harm to them in the long term? And then, of course, I got to throw it in there. That's why here we have our fully underwritten loans, where if there is any file, we can send it into underwriting and get it all the way underwritten. And therefore, you're just waiting on a contract, title, and appraisal. Not only do you close faster, but what about the peace of mind that you would have going into your offers, knowing that you are truly approved? It's so many things that can happen in this industry, in this business, on your loan. I've done tons of videos on it, how your loan can go from approval to a manual underwrite. In this borrower's case, they went from approved to now they don't approve. why even put yourself through that when you can pay a small minimal fee, get your loan underwritten, and have the confidence and be stress-free going into your offers and throughout your 30 days or your 20 days of your loan process, just knowing, hey, I'm approved. I'm just waiting on everything for the home. Not saying things can't go wrong on the home side, but there's nothing better than knowing you didn't do anything wrong and you can be refunded your earnest money and all these things, and it not be the fault of anyone. So I know this is a longer video, but of course I love to provide you clear, concise information, but I also like to make it very, I like to make it where your 10-year-old could understand what I'm talking about, and hopefully it makes sense. So of course, if you have any questions at any point in time, feel free to inbox me. Please like, comment, and share this video. I promise you, there are tons of people in the world with disputed accounts right now who may want to buy a home and do not know that there are things that can affect them. And if you want someone like me that can help them with their loan process, or just starting, or just giving them advice, please reach out to me, 817-601-5456. It is my complete pleasure to help you or someone you know. So I hope you have a fantastic rest of your week. I want you to stay safe. It's hot here, but of course, be blessed. Until next Tuesday, bye-bye.